Kevin Hassett is the former chairman of the Council of Economic Advisors under President Trump. Kevin, good to have you. The notion is this, that inflation, prices still out of control. You're looking at the core PCE without food and energy, with food and energy. But the rate of increase is slowing. Do you buy that as a positive development, or is it a short-lived one?
Well, I mean, I hope it's a positive development, but I'm, very skeptical that it's not going to accelerate from here. There was a weird blip with gasoline prices going down in April, and they've more than recovered that ground in May. And the thing that I look at really is that the consumer is really pessimistic. So the Michigan survey, came out and told us that people are as pessimistic about consumption as they've been going all the way back to the financial crisis. And one way you can see that is the savings rate has dipped to below 5%. Which is the lowest it's been since the September of the Lehman crash. And so the consumer is seeing all this price news and thinking, whoa, I got to take it easy. I think that the optimists are, one, hoping that inflation reverses quickly, but I think that they're, believing April too much. But they also are making a mistake of looking at the numbers like the retail sales, right? It so used to be that a 0.5 retail sales print was a great number, but now with inflation so high, it means there's no real growth. The bottom line is first quarter was negative. Second quarter right now, GDP now has it at about 1%. If it comes in negative, then we're in a recession right now. And so I think dismissing that probability is a mistake.
All right. Now, then the issue becomes, what are we to make of a sometimes very resilient shopper? Very different, from Walmart and the Gap and Target and Best Buy to Exporting Goods, all of whom indicated that things are slowing down, and the guidance wasn't very much to write home about. Yet you have Costco and Macy's, the Dollar Tree, Dollar General. They're doing just fine. So it's not a consistent read. And then we're reading about these record bookings of the likes of Southwest and Delta and JetBlue for summer travel. Nearly 40 million Americans taking to the road, even in the face of higher gas prices. So that consumer seems pretty resilient. What do you think?
That's, as you know, you're a real student of economic history. That's been the history, is that consumers smooth through recessions, and really it's, capital spending and inventories that give it to you. But if you look through this week, the S&P retail index is down about 39%. Maybe it's wiggled back up a little bit in the last couple of days. But retail has really underperformed, which, I usually don't disregard signals from the market. And so when I see people as pessimistic as they've been since, basically the financial crisis, I see the savings rate go way, way down, which means that people are eating into their savings already. Then I have a hard time thinking, and I know that gas prices rebounded like crazy in May and are going up from there in the summer. I have a real hard time being bullish about consumption. And, and I stay with my recession call that I think right now we're in a recession.
All right. Well, you're a pretty smart guy. I would pay attention to that. But Kevin, one of the other things I see going on here, and I just want to get your thoughts on it, is whether the higher prices themselves are going to be the cure here for what ails us. That you get to a point where those in all income streams say, the hell with it. I'm not going to go crazy and keep buying at this pace. I'm done pivoting from pork to something cheaper. And normally that is the signal of a slowdown, worst case scenario, recession, where you're in a deep funk, the stagflation you hear so much about. Is that what you're seeing now? And could that, in a flip sense, be what cures these higher prices, a recession?
Right. Well, that's a really great point, but there's a race between the dismay about the price and the insistence with your boss that your wage go up to keep up with inflation. And if you look at the wage measures, wages haven't kept up with inflation. Real income has been declining, but wage growth has really, in nominal terms, ticked up quite a bit. And so the wage price spiral is the risk that goes the other way. And there are quite a few signs that wages are almost keeping up with inflation, which is what you see at the start of a wage price spiral. So I still think the base case, sadly, is very low low growth, recession level growth, and inflation. And if I were at the Fed, it really puts me in a difficult communication spot, because you ought to say, yeah, I recognize that we might be in a recession. You figure, like, given the history of GDP now, if the second quarter's negative, then we're in a recession for sure.
Yeah.
And there's probably at least a 50-50 chance the second quarter's negative, right? And so if you're at the Fed, you're saying, well, there's a 50-50 chance we're in a recession right now, then people are going to say, well, why the heck are you hiking rates? And so they really are in a communications bind, and my view is that it's not going to be an easy out. But I know that there are a lot of people, especially in markets this week, that are hoping. There was a lot of happy talk at Davos, and I think it's had a little bit of effect on markets. But my guess is that over the next week or two, that'll just we'll get all that back.
That whole crowd at Davos concerns me, Kevin. But I always enjoy having you on. Very good to see you. Have a safe weekend, my friend.
Thank you.